Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I try to the best of my ability address and answer some of your comments and questions. Now, I have just finished, well, yesterday I finished, a standalone video on three companies, Neuron Pharmaceuticals, Clarity, and also Telix. I've combined that into the one video. So watch out for that video. I should publish that within the next few days from whatever day it is today. What is today's date? October the 12th, 2024. Anyway, don't have my watch on, so without my watch, it's actually charging right now. Without my watch, I am lost. Have no idea what date it is. Okay, so let's get stuck into it. And now, because I am getting quite a few more comments than I used to and questions than I used to, I think I'm going to have to be a little bit more selective when it comes to answering and commenting on your comments. But let's go back 1 month ago, and there was a question from Nice007 or Nice007 in regards to Apiam. I am slightly following this company right now because the share price has pulled back a fair bit. And I'm thinking there might be some value in this company at these levels. And the company did release something negative, would have been in May, 22nd of May, share price dropped 15% on that day. Share price really hasn't dropped all that much from there, which means, the market has already priced all the negative stuff into the share price right, or the valuation of the company right now. And the market doesn't think the company's not going to release anything bad in the future. Now, the share price and the chart is starting to look a little bit more interesting. Share price has just pulled above $11, and there is the first signs of the share price moving into an uptrend. Now, this is just the daily chart. A lot of times I like to have a look at the weekly chart, even sometimes the monthly chart. So there was a nice little support level at around about, well, $10 is the natural support level, but also $9, and that was a share price lows back in 2022. And I'd also assume the valuation looks pretty good as well. P ratio about 11. And I would assume some okay growth over the next 5 or so years. Now, if you did listen to my video that I did release on October 11, you would have heard me say, in regards to a question about smart parking, my slight concerns when it comes to the future in parking. That could also be true for Eagers Automotive. I think there will become a time, and more than likely when we're not alive, that when people don't own their own cars. It's just pointless owning your own cars, and everything's automated, and maybe a few people own cars, and that's how they make their money, that sort of thing. But I think there will be a time when we just don't need parking, when we just don't need car dealerships. I think there will be a time like that, but I don't think it's in our lifetime. But who knows? Maybe it is. So in that sort of situation, Eagers Automotive will become irrelevant. But I don't think they have to worry about that just yet. So at this point in time, there could be some good value, but the most important thing for me when it comes to this company is just the chart. And the daily chart is starting to look a little bit more interesting. The other thing I like to look at is volume. And we have seen a little bit of an uptick in volume since they released their results. Now, on that day, initially there was some interest in the company, and then the share price pulled back, and the share price right now is at the highs on that day. So that's why the chart is starting to look a little bit interesting. And it wouldn't be surprised to see the share price now move into an uptrend. Or wouldn't be surprised to see the share price just go sideways again, or maybe even pull back towards $10. I know, so I'm not convinced either way just yet, but it is looking a little bit more interesting. So thank you for that. Nice. Next one is Doug Technology. Dimisalang. What do you think of Doug Technology? The latest report shows they are burning a lot of money for expansion in the Middle East. Do you think they will grow more in the future? Would love to hear your thoughts on this. Now, I am a shareholder of Doug. Now, originally I bought into Doug just as a trade. Then I took profits and I maintained that position in Doug just in case they do continue to grow in the future. Now, based off the chart, actually, I'll look at the chart last of all. Now, let's have a look at the financials of this company. So, Doug Technology. So, for instance, the company has a market cap of 285 million, enterprise value of 325. So, I have a little bit of debt. P/E ratio says 77.3. So, you might say, wow, this company is insanely Expensive revenue growth over the last 3 years, 19.4%. EBITDA growth, 18.86%. But earnings per share growth is actually negative. And as the commentator said, the company is growing, but they've gone backwards when it comes to revenue or income, as it seems. Let's have a look. Yeah. So the revenue is growing over the last few years after it dropped. And you'll see a likewise similarity in the chart. Share price dropped from when they listed to about 2022. And then as the revenue started to grow and the company became profitable, we also saw the share price take off. Now, the profit did drop in the last year, but there could be some reasons behind that. That would also mean the margins drop. But again, they could be spending a lot of money now to grow in the future. And as the original poster mentioned, that's what they are doing, burning a lot of money for expansion in the Middle East. Now, that could work out. Don't know at this point in time. Now, my one concern about DUG Technology is that the share price has pulled back a fair bit. So there's a little bit of skepticism within the market in this company right now and their progress in expanding in the Middle East. So share price has gone from 330 down to 221. That's a pretty significant drop. We're talking about a 33% drop in about a month and a half. And in fact, this is the first time I've looked at this chart and I've gone, oh, the chart looks pretty negative right now. It's starting as negative as it has in the past couple of years. Now, there's me taking a position at 83 cents. And that was just a trading position because the share price was in a downtrend. Share price went sideways for a while. Share price broke out at about 60 cents back in late 2022 and moved into a nice uptrend. We saw a nice subtle increase in volume. Share price continued on its uptrend. And this is the first time since I bought in that I've looked at this chart and went, doesn't look quite as good. In fact, if I was absolutely trading this, I probably would have sold out by now. In fact, I'd put a sell position right there. There's probably another sell you could do. A sellout point right there. And the share price actually did bounce off that recently on the 19th of September. So the chart for DUG is looking a little bit negative right now. So this tells me the market is a little bit more skeptical about their fortunes moving forward. And sometimes it does pay to listen to the market. So that's DUG Technology. Do I think they will grow more in the future? I think there's no certainties in life. And I think if they are successful in their expansions overseas, more than likely they will grow. We've already seen the revenue grow over the last few years. And if they maintain their goals for the future, there will be growth. But that's the question we have to ask ourselves about all companies. Will they continue to grow in the future? I ask that for even companies that aren't growing, like the banks. Can the banks grow in the future? More than likely not. Therefore, I don't think those companies are long-term investments. And for DUG, I just don't know. If you have confidence, and I think it all comes back to conviction. If you have the conviction and the confidence that can grow, maybe now is a good time to take a position or add to your position in the company. Okay, Matisti Yibo is talking about Apiam Animal Health. I think I recall you had Apiam Animal Health on your watch list. Yes. It looks like a good rise recently with higher volumes. Someone bought in as big as well. Yes. And interested on your thoughts around it, around if it has any steam. Now, this was written on the 6th of September, and I would say yes, 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 yes. So if you go back to the 6th of September, there was some really big volume came in on 4th. And on the 6th, the share price, had broken out at that point. So there's the chart. This is Apiam's chart. Share price, massive spike in volume. This could be just institution taking, or could be cross trade. I'm not sure. I'm pretty sure there was a takeover bid for Apiam Animal Health the other day, if I remember correctly. And for some reason, AHX, and they've rejected it, if I remember correctly. Apiam rejects non-binding indicative offer, and I like that. Now, the chart definitely looks much better. And I think that's why there is a takeover bid, because whoever's I've seen this a lot. Share prices of companies in well-defined downtrends, and as soon as the share price starts to turn, there's a takeover bid. I've seen this numerous times over the past few years, and it seems like they're waiting for the share price to turn. So they're using technical analysis. I am almost convinced a lot of private equity, fundies, all these companies taking over other companies, they're using technical analysis because there's a common theme. Share price in a downtrend, share price starts to turn, lodging the takeover bid, opportunistic, grabbing the shares in the company when they're turning around. So if that's what they're doing, we should do that as well. So it really emphasizes, I think, in my opinion, emphasizes that what I'm doing is right for me. Looking for companies whose share price are turning upwards, moving into uptrends. And Apiam Animal Health is doing that. Well-defined downtrend before this. Well, not before this, but the downtrend came to an end late last year. Now, this company's profitable. And I'm pretty sure they also pay a dividend. So P/E ratio of 17.5, markup of only 86.7. You could argue low margins. So I wouldn't say this is a high quality company or even has a potential to be a high quality company. But you can still be profitable and receive a nice dividend. And if the company keeps on growing, that dividend will keep on growing with it. Now, the questions are, will this company grow? So it could. I don't know. But all I want to do is just have a look at the chart. And the reason I started following this is because the share price reached 40 cents on a few occasions and then pulled back. And then the share price broke above 40 cents back in 26th of August, and then it pulled back. So if I was taking a position in this company, I should have really taken a position around about 40 or between 40 and 42 cents, which is not much lower than it is now. But we have seen an increased interest in this company since then, and the share price and the chart looks much better than it has over the past few years. So definitely this company is on my watch list. And yeah, I don't see why I didn't take a position in this company. Yeah, anyway, the problem with the volume here is because of that massive spike in volume, it really distorts everything. But we have seen a couple of, it's really hard to see. I just wish I could delete that one big spike in volume just to see how the rest of the days around that day look when it comes to volume. In fact, we can sort of do that if we have a look at the trade history. So where's that spike? There it is, 27.9 million. There was some good volume the next day as well, 1.1 million. And the reason I say that was good volume, this company rarely sees volume above 1 million shares. We just saw it a few days ago. So that's another good sign. And then we saw it that day. And if we go back before that really big spike in volume, we saw some good volume coming in June 2024. So let's go to June 2024. Yeah, nothing much happened with the share price then. And it seems like these are just one-day spikes in volume. I want consistent increase in volume. Sort of like, what's a good example? A really good example of this increase in volume is a company I am trading right now, SRG Global. You can just see as the share price started to move in the uptrend, we've just seen the volume expand. And not only that, we've seen really big volume in consecutive weeks and consecutive periods here. That's a good sign moving forward for SRG Global. That's what I mean by expanding volume. That's a really good sign. Ben Hutchinson is talking about MVF, Monash IVF. Buy the dip. Just going to have a quick look at this company just to see what the chart looks like now. See if there's been any bounce or anything like that. Haven't looked at this chart for a while. Okay, so nothing much happening with MVF. So if I was just looking at a chart, I'd probably stay out of this company right now. So it all is all based on your opinion of this company, whether there's good value, whether this company could be high quality, low quality, that sort of thing. I'm not sure if I would call this company high quality. So more than likely, I'd just be looking at the chart. And definitely the tide has turned for Monash IVF. Not sure exactly why, but Ben Hutchinson thinks it's a buy the dip situation. So he's pretty positive. And he's in it, so that's why he's positive. And Patrick C says MVF is not an ethical investment. I think when it comes to our opinion on what's ethical and not, it's all personal. It's all personal. I definitely could have an argument to say the banks are not ethical, Woolworths are not ethical, Coles are not ethical. In fact, I could go through every single company on the ASX and say, well, that's not really an ethical company, is it? You definitely have an argument to say that. So Patrick C says MVF is not ethical. I would assume that Ben Hutchinson thinks, yeah, there's nothing wrong with the ethics of MVF. I have no opinion myself, but I'd probably sway more towards Ben if he did have that opinion. Okay, Simon PT says, thanks for the technical update. Agree with your gold sentiment. To the viewers of this channel, the ASX will most likely to be a bloodbath tomorrow. Don't panic. And that date would have been like that's the 7th of October or September. Don't panic. As Warren Buffett once said, widespread fear is your friend as an investor because it serves up bargain purchases. And let's have a look at the XJO going back to the start of September. So that would have been, so there it is. 4th September? No. Anyway, so the XJO is up since then. Anyway, that's the most important thing. I'm not sure if there was a bloodbath the next day. I can't see the... so that would have been the 7th. I don't know what day that is. Anyway, on regards to what Warren Buffett says, what I found really interesting when I first, or just before I started investing, this was like 2009, people were telling me, oh, why would you be investing in the stock market? There's too much risk, blah, blah, blah. 2009 would have been one of the greatest times to start investing. I started investing the year after, but 2009 would have been one of the greatest times to start investing. Yet there was so much fear in the market. And I do know some people who completely sold out at that time because of that fear. And that's what Warren Buffett is saying. When you see blood in the water, when you see a massive selling off in the equity markets, that's the time to get really interested and start buying. That's not the time to sell all out. That's the time to go all in. So I still remember people telling me, oh, why would you be getting the stock market now? It's so much risk. Anyway, and that was the greatest time to start investing. It's one of the reasons why some people are sort of wanting for a massive correction, because that would leave to the best time to invest. Astronomic, is there an ETF that invests in gold commodities? I would assume there's a gold ETF. Gold ETF, let's have a look. Oh, no, maybe that's not the one. We just have to Google it, I suppose. Gold ETF ASX. Just say that. Here we go. Is there a gold ETF to just... Would that be so easy? Gold. There is. Global X Physical Gold. Tier code GOLD. And I'll probably assume there's more as well. This is a physical... It seems like this is physical gold. And your question was around gold commodities. So you're talking about physical gold or gold companies. But yeah, there we are. Physical gold, gold ETF, gold. Spells it out. The ticker code, gold. Hopefully that has answered your question. Panda Magic Hero, the chart and story for MQR is getting very interesting. In fact, I can name a lot of companies on the ASX, but this one, no. Marquee Resources. I have no idea what this company does. Share price is quite low. For those who haven't heard me say, I will not invest in a company who has a share price below 1 cent. I have been thinking about raising that to 2 cents, which would discard this company and also discard a company I own at this point in time until they do a share consolidation in the near future. I just don't like when the share price of these companies get to really low levels, because that's when you get the pip traders coming in and just pip trading. And you will see the share price struggle to go higher unless they release something really positive. Now, the very fact the share price is 1.6 cents and the volume is really low tells me, the volume has really dropped off. So back in late September, there was pretty good volume. So it's really dropped off the last few weeks. So much less interest in this company. I have no idea what they do. So I'm assuming this is a gold exploring company. SA Pedra Bianca project. I'll just open up this one, see if they have about section. And all companies should have an about section, to be honest, when they release an announcement. And this company doesn't. Looks like gold. This sounds like they're somewhere in South America. No, Italy. Well, that makes sense as well. Banari, Pella Edra, Pedra Bianca. I thought that sounded more Spanish than Italian. Just shows you I don't know Spanish and Italian. And it looks like they're in Italy, Northern Sardinia. And just one thing more about this company. MQR, what's the market cap? I'm assuming it's like 10 million. 6.66 million. Oh, it's an unfortunate number for the markup. And last thing is chart. Marquee. Do I have any interest in this company? And the answer to that is no. Now, there was a nice little, bit of a bit of a peak in volume, increase in volume late August into early September. And since then, the share price has gone sideways. So that can be a good sign moving forward for Marquee Resources. But it's a small company, and you can see another bit of an increase in volume back in June 2023. But that interest in this company faded pretty quickly, and the share price then moved into a well-defined downtrend. So that's a problem with these sort of companies. They can release a really good announcement and then nothing for a long time, and the market just becomes disinterested in the company. Shareholders become bored and they sell out, and that boredom just sees the share price drifting lower and lower and lower and lower and lower. And sometimes you just don't know how low it can drift. And the shareholders just waiting for another positive announcement from the company, and it just never comes. That's the problem with these sort of companies. So the chart is starting to look a little bit more interesting. And I don't know much about the story of this company, but a little bit more interesting. And the very fact we haven't seen the share price pull back after that little bit of a run in late August, September might be a good thing for Marquee Resources. Thank you, Panda Magic Hero. Jan. Hey, Kneppy, I noticed you don't have NextGen in your uranium list. Is that because it's not in production, you don't look at it? No, that was just an oversight. Well, I had NextGen in a different watch list, and then I realized at some point I didn't have it in the uranium watch list, but I knew where it was. So, and then I just didn't move it. And then now, because of your question, I've moved it. So if you've noticed something, then other people probably notice it, and that's why I actually did move it into the uranium. I have a feeling I had it in my energy watch list, not the uranium watch list, and that was just a simple oversight, but I did know it was in there. But yeah, I think it is good to have NextGen in my uranium watch list. So if you have a look at my uranium watch list now, which there it is, it's down the bottom. There it is, down the bottom. In fact, I had a look at these charts earlier today, and yeah, nice bounce of all uranium companies because uranium's had a bounce. Go figure. The height and tight flag is a good one. High and tight flag. I've always liked these flags. Something like this. Yeah, this is from. I really like that. When you see the share price go on a rally, I've never really caught it high and tight flag just because I forget the name. But when you see a share price go on a massive rally and then just go sideways for a period of time, I just love those plays. So I'm trying to think of a good example. Here's an example right here. Share price on a rally, goes sideways for a while. It's a good sign for me. It shows me there's no enthusiasm in the sellers. Share price goes sideways, and then eventually share price will pop up. I'm trying to think of a really good example. There's plenty of examples, I would assume. Let's have a look at some companies I'm trading right now. If I can find it. Oh, wait, there it is. What's a good example here? Is Catapult. Is there good examples here? So on occasion, you'll see the share price just go on a run. I'm not seeing well-defined examples here, but a lot of times you see the share price go on a run and then go sideways, go to run, go sideways. I'm trying to think if there was a really good example, a really, really good example, and nothing's popping up in my mind, but they're definitely out there. Oh, I think Nuix might be. Yeah, Nuix is a good example here. This is a really good example. So back in August, share price went on a massive run, 2-day run. The share price went sideways. Look at that. Beautiful. Just going sideways. And then another run. And then even after this run, share price went sideways for 4 days. And then another run. And then after that run, share price has just been creeping higher. That's what I look for. Really good run, share price goes sideways. That's I suppose, is called a height and tight flag. Yes. Thank you, Scott. Scott, II9RB. Philip, 5162, says Medadvisor has gone from expensive to cheap now. Good time to buy. It's not really a question or just a comment. So let's have a look at the chart for Medadvisor. I'm pretty sure that is Medadvisor, MDR. Medadvisor. Okay, so really good run with Medadvisor. And the share price has pulled back. In fact, it pulled all the way back to 32 cents. Now, it's gone to 40 cents, but I'm slightly concerned the share price has not rallied even more. So we've seen a peak, another peak, and then the third peak. The last two peaks have been lower than the initial peak. If the share price falls below 32 cents, that would be concerned. This would be the very concerning level, and it's been an important level for this company for a while now. That would be an important level, but that was a great buy. If you bought it at 32 cents, that was a nice level. So the company, I believe, has gone to profitability, and it's not cheap, still not cheap, I think. Market cap of 226 million, price earnings ratio of 820. But they will grow, I would assume. But yeah, anyway. That's Medadvisor. Yeah. Ooh, this is a question with a few replies. Rick Fellion. Watch the opening. Guzman was as high as 7% higher, 41.50, before bringing out profit takers. Was only 3,000 shares left for sale and 36,000 buyers. Then more sellers came out of the woodwork, closed 40.43. New CEO Westpac, 4.5 million half a year, half a pay of the lady from Westpac, whom was CEO at St. George. The Westpac at nearly 10 million pays gone down. I won't talk about Westpac and CEOs and pays. I do think they all get paid way too much. I think many of us could do just as good a job as these CEOs. I actually have opinion, and this is me working with not CEOs, but leaders of organizations. I've worked with them, and then I've realized I'm questionable about some of these people. Anyway, James Dean replied, Guzman has a $4 million market cap. Financial year 24 profit before tax is 16 million, P ratio of 250. We're definitely in a bubble. And Rithelian says stock was limited when floated, hence the bubble, plus US Australian dollar may be another reason. It is actually one, I do actually give credit to Guzman and the investment banker who did this IPO, because they really limited the shares floated, really limited. And that really led to more demand than supply of shares. And that's why the share price and the valuation of the company is way too stretched. I would not even think about buying shares in this company just yet, because there's a lot of things that can go wrong. Maybe the growth won't be there to justify the current valuation. And the share price did get to $43 on that day, and share price 12th of September, and the share price has not yet recovered. Share price has pulled back a little bit. I'm just shocked the share price is so high and the valuation. Now, I have heard some people talk about the technology this company's doing. They're also investing in other tech companies, apparently, or something like that, which is intriguing. That can help them grow in the future. But I do think they're relying on expansion overseas, particularly in America, and I am dubious whether those expansion plans will come to fruition. I understand they've made their name in Australia, but this company would not be known anywhere else in the world, just Australia. So I think it's going to take time before they are be considered, or could be considered, a international success story. And I think until then, this company is overvalued. But I could be wrong. Could be wrong, and that's the whole point. I could be wrong, but I could be right. And I'd rather take positions in companies where I'm more likely to be right than more likely to be wrong. In this case, I have no idea. So I just have no interest in Guzman. If the share price pulled back to, say, $10 to $15, I might consider buying shares. If, a big if. Marion Elliott, higher hold bot, which is Botanix Pharmaceuticals, up 44%. Can you have a look for me? I was burnt with Drone Shield, lost all my profit, now in big loss, so I don't want to be in the same position with this stock. I can have a look for that. That's Marion Elliott. Okay, so about a month late. And I'm looking at Botanix Pharmaceuticals right now. This is a chart I do like. I do like this chart. Now, I would assume this is a story stock. I don't think this company has any revenue. So I am very careful and wary of these type of companies, because what's driving this company's share price higher is the story and sentiment. That's it. So you do have to be wary about these companies. What is driving the share price higher? And that is a big question. So they did release an investor presentation on the 24th of September. And I just want to see if this company has any revenue or any receipts. I'm assuming no. So again, it's just the story. Now, I could be wrong, and this company might have receipts. I don't think so. And it's taking for ages to open up. And here we go. Well, they have a little bit of receipts, 132,000. So it's not a lot. So they're not at that point where they have hit that inflection point of becoming profitable, cash flow generative in their business. And they have to achieve that for me to get interested. Now, the chart does look interested, but one of the reasons why the share price might be rising is just because of the chart. Share price is an uptrend, and if there's any threat to the uptrend, you might see pressure on the share price. But at this point in time, the chart does look good. And I do like this really big peak in volume in June, and that has helped, but I have no idea. What's the markup? $700 million markup. So there's a lot of promise built into the share price. A lot of promise. So this is sort of company, yeah, I think you have to understand why you're in it. Do you understand the technology? Are you in it for the long term, or are you just trading it? And if you're just trading it, I would put it in a stop loss at some position. I would definitely be, if I was trading this, I would definitely have a stop loss at least 30, maybe even higher than that, at least 30 cents. And by the way, Drone Shield, yeah, I was trading Drone Shield, then I got all out. And the big all out day for me was the 16th of July. Now, I did get out the day before, not completely, but when I saw that big down day, down 22% on pretty big volume, that was sort of a trigger for me. And then I got completely out a few days later. I think I got out all out on the 19th of July. And since then, I've seen no reason to get back in. Nice bounce off $1. Again, $1 was a nice bounce. And it seems like $1.12 is a nice little support level as well. There was a nice little bounce off $1.12 back in September. But the share price has just gone down 4 days in a row. Chris and Caroline, Clarity has been holding for now. Any thoughts on Botanix and Cove, which is, what's Cove again? Botanix and Cove. I'm going to kick myself. Cleo Diagnostics, that's right. Cleo Diagnostics, okay. So Clarity has pulled back. I've mentioned Clarity a few times in the last few videos, so I won't talk about Clarity. Now, I have not had a look at Cleo Diagnostics charts for a while. So a nice little rally after, I'm pretty sure I featured this company in one of my videos, 29th of May. Share price popped up on that day 41%, and the share price went on a beautiful run. Now, it does look like the run has come to a possible end. I'm just looking at the peaks in the share price, and the last peak was lower than the previous one. So we had a 48-cent peak in August, and the last peak got to about 44 cents, and the share price has pulled back. So again, this is another instance where you have to know why you're in this. You bought shares in this company. What's your plan moving forward? Are you in this for the long term, or are you just trading it? And if you're just trading it, what price do you want to sell and maybe take profits? And maybe that price is back 30 cents. Or maybe it's 34 cents. I could see that as well. And other than that, I don't know anything about the potential, and I'm pretty sure Cleo Diagnostics is also a company without any revenue or receipts. And this is just a story again. It's just a story. And whether they're successful, no one knows. This company could be highly successful. It may not be. No one knows. Not even management of the company knows that. We just don't know. I do like people who, what they do is they build a portfolio of these companies, like a basket of these type of companies, on the probability that a few of them will be successful. So you might have 20 of these companies in your portfolio on the knowledge that all it takes is 2 or 3 of these companies to be successful, and even if the other 17 aren't, you probably made a lot of money, particularly if they're like 10 or 20 baggers. You made a lot of money. Other than that, no one can tell you if this company is going to be successful. Ben Hutchinson, Lovisa down is more than noise, as I understand. The sacked Smiggle CEO is incoming at Lovisa. I've just noticed, I did have a look at Lovisa chart because I am a shareholder of this company, and the share price has recovered. So I wonder if that was noise. Share price has recovered back up to $36. Now, otherwise, if you have a look at this chart, share price is not really, it's sort of gradually going higher. And I do have a sell point here. So this is one of those companies where I thought, I'm going to hold this for the long term. But I'm deciding more and more, or thinking more and more, that I should trade these companies. So if I see the share price of this company fall below $29, I won't sell out completely, but I will sell out half my portfolio. And then when I see the trend going back up, then I will take a trading position. So I'm thinking I'm going to do that more and more with some of the high quality companies I own. Trade them as well as hold them. Make a bit more money. Anyway, I do remember that the sacked Smiggle CEO is incoming at Lovisa. So there is concerns about the new CEO and whether the expansion plans overseas will come to fruition. But seems like the market has ignored that at this point in time. The share price has rebounded back up to $36. QFE, Philip Ho wants to have a look at QFE. Whoa, how, geez, Quickfee. I'm pretty sure this is a company that helps lawyers get some money that they are owed or something like that. Quickfee. So, like accounts receivable, but for lawyers. I think that's what they do, something like that anyway. I've never had a look, but for some reason that's ringing in my mind. Is a financial technology company specializing in providing tailored payment and automated invoicing solutions for professional service firms. Yeah, so it's along those lines. That's from Hot Copper, by the way. Specialized professional fee funding for service providers. As a Quickfee member, your invoices are paid on time and in full. For some reason, I just think of this company servicing lawyers. Anyway, back to the chart. I have no idea about this company. They do release pennies 4C. I think they do. I could be completely wrong. I'm trying to remember if I remember looking at one of their pennies 4Cs. And for some reason, nothing's popping up. No, they released a business update, but no pennies 4C. Interesting. Yeah, just a business update. No pennies 4Cs. Anyway, I don't think this company's profitable, but the chart, share price in a long-term downtrend. Now, I do remember this company back in 2020. Share price went on a massive run, and I was like, why? Still remember going, why? And then the share price has been a downtrend since then until back in March, April. Share price went on a run, massive run, went from 5 cents to 10 cents, doubled. And since then, look at the volatility all over the place. Without doubt, 10 cents is a resistance level, as it is for all companies. Share price of Quickfee has got to 10 cents 3 times. Well, technically 2 times, and very close at the start of October. And since then, it's just been trading in between 10 cents and 6.5 cents. So a lot of volatility when it comes to Quickfee. The other thing I look at is volume. We haven't seen a massive expansion in volume. So I have no interest in Quickfee at this point in time, unless they can become profitable. I might have a close look if they became profitable. Okay, Rahul Kalyan. This is a long one. I did read this. He did have some interesting thoughts within this. For instance, saying maybe I should do a possible wealth within type subscriber model where I upload first 10 to 20 minutes of my video on YouTube and the rest of the video juicy bits are behind it, paywall. Don't think I'm going to do that. I don't think I'm going to ask or ever request people to pay for my videos. Now, I don't get much money for doing this, but what I might do is just ask for donations, something like that. That could work. But I don't think I'll ever ask, like I was thinking maybe Patreon or something like that, but then I'm still asking people for money. I'm not sure what I'm going to do. Even though I don't need the money, having extra money would be good because I am part-time with work. And if I could just have this as my work, as my income provider, I would love that, not having to work for other people, just working for myself. So I haven't really thought about that as much, but thank you for this very long comment. I'm not going to go through the whole thing because he also seems like he was concerned that I might stop doing this channel. At this point in time, no. But at this point in time, no, I won't stop doing this channel. And that person who was a bit of a pain back then, no longer a pain. So that person did show their true colors in one comment, and I sort of banned that person. I think I banned him, but anyway. Thank you for that comment. Very long comment, Rahul Kayan. What do I think of elders? Great question. What do I think of elders? This is a trading stock for me. That's all it is. It's not a company I would own for the long term. Now, in saying that, if you do have a look at the weekly chart, oh no, I was going to say the weekly chart has looked pretty good from 2014, but you can see there are periods of time when the share price drops a fair bit. But the share price did go on a run from 2014 through to 2022, but then struggled between 2022 and 2024. I'm not the biggest fan of agricultural companies because they have very little control over how they perform financially. And there's going to be periods of time when they do really well and other periods of time when they don't do well. And I learned this the hard way with Costa Group, which is no longer on the ASX. They were selling fruit and veggies also, maybe. Can't remember. Definitely blueberries and stuff like that. And they had troubles numerous times because of things that are out of their control. Weather events, not only weather events, but also bugs and this nasty stuff that would affect some of their crops, which they couldn't control. And that's the same thing with elders. Agricultural company, they are hard. These sort of companies are hard, and sometimes you see the share price drop a lot, rise a lot. Climate forecasts are very important. So we are expecting, I think, a La Nina, which could be beneficial for elders, but who knows? We just don't know. Anyway, so what I would do with elders is just trade it. And I was trading it on this beautiful uptrend from November. I think I bought it in November last year, and then I sold it on this little dip, which was a mistake. And that was a mistake I did learn. Don't sell on the day. I had that rule in, and I just completely forgot it when it comes to elders on this particular day, and I'm just kicking myself because the share price then rallied. And that's exactly why I don't sell on the day. Just wait to see how the market reacts over the next few days. So I just trade elders at this point in time. And this point in time, it doesn't look that interesting to me. But it could in the next few months. Who knows? AU5657 360 sold off due to long-term director sold some shares. Plus, Apple announced iPhone 16 allows satellite tracking. Now, Life 360, I'm pretty sure that's what you talked about. The director did sell some shares. Was it really? Well, I can't remember that. Let's have a look. Yeah, there's a lot of these SEC forms 4s. Yeah, I hate these. Ceasing to be a substantial shareholder. I wonder what the SEC form is. Is that director selling or something? Looks like statement of changes in beneficial ownership. I'm not a big expert in these. I don't really look at these at all. Anyway, so we'll just Chief Financial Officer acquired, this person acquired some shares. The CFO acquired some shares. Anyway, I just want to say that there's actually no evidence that director selling shares has any direct relationship to the future share price performance of the company. Now, there is evidence that when you get a group of directors selling a large amount of shares, that is an indication that something negative is happening with the company. We saw that with A2 Milk about 3 years ago. So when you see just one director selling, it doesn't really mean anything. Now, some people will say, well, in the short term, yes, you will see the share price drop. But a lot of times, that's only in the short term. We're talking about the longer term. There's no direct relationship between the director selling and the longer term performance of the share price of the company. This other one, Apple announced iPhone 16 allows satellite tracking. Yeah, there's been a lot of thought that eventually there will be an app that Apple releases that will compete with Life 360, but that hasn't happened yet. And Life 360 is just a beast. And when I started hearing people talking about Life 360 in the United States, I think I heard it on a crime podcast. The family were using Life 360 and they could follow the movements of someone who either died or was kidnapped or something like that. That made me really open my eyes that Life 360 is becoming quite prominent out there. Even though I'm not the biggest fan of their technology, I just don't understand why people would let themselves be tracked. I'm not the biggest fan of nannying, that sort of thing. And so, for instance, this bill to restrict underage, or not underage, to restrict youngsters from using social media. I hate this sort of thing because, in my opinion, this is nannying, and the government should do way less nannying. I hate it, 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 hate it. Yes, but government should not do any that sort of thing. It's ridiculous. HBK Fortis 239. If you have any book suggestions so I can listen to something at work, that would be great. The one about volume and or breakouts would be cool. Thanks for the VODs, watching daily for a week now and feel like I'm lost of a noob already. Just got to close the door for a second. Okay, so I do get on occasion questions about books and book suggestions. So I think I should do a standalone video on this particular topic. And I have actually answered this in other answer reply videos, if I remember correctly, but maybe I should do a standalone just so I can provide a link and a video for you, because I do have a lot of books I reread, and the one about volume and or breakouts would be cool. And that's actually one of the books I'm rereading right now. I am currently reading about 4 or 5 books. Yes, I do read a lot. So wait out for that video. I'm not sure when I'll do it, but eventually I will do it. Scott says Acusensus caught his eye. And it caught my eye the other day too. And this is the chart for Acusensus. Yeah, I don't know what's happening here with this company. Share price is all over the place. I was trading this at one point, but then I sold out, took a small loss. That's okay. And then for some reason, the sentiment in this company has completely changed. I don't know why, but the chart is speaking to me. Now, we haven't seen a big spike in volume, and that is, I wouldn't say concerning, but when you see the share price rising like this, I would prefer some higher volume. And we're just not seeing it. And yeah, I just don't know about this. They will be releasing their Appendix 4C. And I think maybe the market is saying, "Ooh, there's potential. This Appendix 4C could be quite good." The last Appendix 4C wasn't that good, if I remember correctly. Maybe it was good. So this is what I do when I open up an Appendix 4C. I don't care about the commentary. I go straight to the cash flow statement, page 6, and the company was operating cash flow positive by a small amount, but also have a look at capital expenditure, $1.6 million. So they were barely free cash flow positive. And then if you also include intellectual property, which is sort of, what's it called? Capitalized research and development, or expense, no, capitalized research and development. This company was not free cash flow positive. In fact, they burned through cash. So operating cash flow positive, but free cash flow negative. But still borderline free cash flow positive, we could say. Yeah, anyway, the chart, does look good if you just sort of ignore. I would have preferred the share price going sideways before the share price started to move up, and I probably would prefer a little bit higher volume. But again, there are many opportunities in the market. So even if I don't like this sort of chart, I might like another chart that you don't like as much. So there's so many opportunities on the market. So if you do miss one, just move on to the next one, because there's so many opportunities. Liam Jones, Resmed is breaking past its 2-year high. Let's have a look at Resmed chart, because I haven't looked at this chart for a while. Probably look at this chart maybe once every 2 weeks. And, oh yes, it did get up to $38, a nice little pullback. Again, in fact, if you look at the weekly chart, oh, that $38 was not far from the all-time high. And all those people who sold because of fears of Ozempic back this time last year are now kicking themselves. Oh, why did we sell out? Why did we sell at $21? Share price now at $35. So share price is 67% higher than this time last year. That's right, 67% higher for a company the size of Resmed. That just shows you that the market can overreact at times, and we can take advantage of the market overreacting. And that's exactly what a lot of people did when it comes to Resmed. I don't know why people were selling. I'll put that to you. Maybe it was just traders. They saw the downtrend. But again, this was just a valuation play for me. I saw good value. I didn't care about the trend or the chart at that point. This was just a value play. And that is sometimes a problem with technical analysis, is you forget about the value. There was value in Resmed. Now, maybe some chartists did see the value and they bought some shares at that price, but they would have probably been start buying shares until quite a few months later at much higher prices. Karat Singh wonders what's going on with FND. Quite the sell-off in the last 5 days. Thoughts? Well, one thing I've noticed with FND is the share price can be quite volatile. So I did take profits with this company. Forget when. So I've been holding this company for a long, long time. Took some options at 90 cents at the start of the year, and shares have been all over the place. I do have a sell price at $4. Not sure why. Just looking at this. And maybe it should be there. 340. I don't think it's going to get close to that at this point in time. And more than likely, I will raise it. But yeah, you can just see a lot of volatility with the share price. And in fact, when this person did release or put that comment onto my channel, the 10th of September, or the 11th of September, the share price did reach that sell point. Yeah, on the 11th of September, share price did reach a low of 344. And then the next day, there was a massive amount of buying. Share price rose 16.3%. That was a really bullish day. That would have been, if I was paying any more attention, I would have or could have definitely conceived or perceived taking a position on that day. A really bullish one day. When you ever see that really nice green candlestick, the share price has pulled back. That's a sign the share price has reached the bottom and the share price is about to go up or continue going up. And it did. It went from that price, $4 at the high that day, all the way up to $5.20. So yeah, I always have a look at these green or these sort of candlesticks, like either solid green or solid red, and I just look at the context. And in this case, that was quite clear the selling had come to an end, and now we were seeing some buying, which probably supports the idea that people saw some value in this company when the share price got to about $3.40. That's why I actually moved this line down to that level. It's a pretty significant, important level for Findi. Findi, go Findi. Greg Milrose, I wouldn't touch Steadfast. Yeah, as the revelations regarding to dealings between that's that and Strata owners. Yeah, this is that Four Corners. I actually did watch that. It was quite. So I am selling my place right now, and then so I do still live with my ex-partner. Believe it or not, for 4 years we've lived together. It was a very amicable split, but we've decided to go our own ways. I think that's very beneficial for both of us. And I'm just been thinking, what will I buy? So my thinking right now was a unit, but I just don't want to deal with the strata, or what's it called, the corporate body, whatever they're called. I just don't want to deal with that. Oh, just thinking, well, dealing with that just makes me. But I don't need a big place. That's the problem with the place I own now. It's massive. It's 5 bedrooms, massive yard. We don't need all the room, and we're going to get a pretty good price for this place. And I want to buy something pretty small, and then I'll increase my cash I can invest in, which would be really good. And I can make way more money with the cash I invest in than the property increasing in value. That's the way I look at it. So I was looking at units, and this Four Corners was enlightening for me. And another thing I'm thinking about buying is a house in a suburb that is not highly thought of, that will eventually go through gentrification. And a lot of suburbs in Brisbane who are considered pretty poorly will have that. In fact, where we bought many, many years ago was one of those suburbs, and it's been gentrified, which is why we can sell this place for a lot of money. So I was thinking somewhere near Ipswich, Collingwood Park, or near Logan, because eventually those suburbs will be gentrified, in my opinion. But I haven't thought completely about it. I do like the thought of being near the city, owning a unit, and I could buy a unit for 500, 600,000, no worries, for what I'm looking for. But the only concern about units is, first of all, the corporate body, but also having a yard. I do like having a yard, but not a big yard. I have a massive yard. I hate mowing. Anyway, so this particular Four Corners thing did enlighten me a bit about the problems about being a unit owner or a department owner. And I can definitely understand why Steadfast share price dropped. But did the market overreact? And you've probably seen that with the share price. It wouldn't be surprising to see Steadfast share price having a nice bounce. Not quite. It actually did bounce after that day, the 10th of September, but it didn't bounce as much as I thought it might have. And it's now pulling back again. And to be honest with you, this is a chart I will stay well clear of. In fact, the share price has done nothing. The share price went on a nice run back from June through to August, but share price has done nothing over the past 2 years. Yep, not interested in Steadfast at all. But thank you for that comment, Greg Milrose. Kamala's debate victory sinks Bitcoin but boosts gold. I'm not going to talk about that at all because for some reason I've liked all these comments, but I can't remember about talking about this. Usually if I like a comment, that means I've talked about it. That's how I know I've talked about it. I try to put in a reply. That's sort of a double certification that I've talked about a comment, but sometimes I might forget to put that in. So usually that means if I like a comment, that means I've talked about it. So these last few comments, I've actually liked it, but I can't remember talking about it. So Min Res, cost cutting, all I can think of is less workers, but more often on site, less admin work. Okay, yeah, okay, yeah. I would consider the opinion that NHF price rise was as much a result of being oversold as it is from the CEO resigning. I would be curious to hear contrary opinions. NHF. Now, we could probably get confirmation of this. If it was oversold, the share price probably rallied for a little bit and then has fallen back away. So we're talking about, yeah, it was definitely looked oversold, but the share price didn't rally all that much. Yeah, and the share price then went sideways, has rallied a little bit in the last 2 weeks, but nothing too exciting. In fact, the volume has really decreased. As the share price rallied, the volume has decreased. You don't want to see that. That means the rallying is losing steam and there's no enthusiasm from the buyers. I wouldn't be surprised to see the share price of NIB Holdings pull back. And I wouldn't be surprised to see share price pull back below $5.60. There was also a reply here. Was a huge drop actually at the time. I was surprised, but that's what happens when you lose. Lose, don't forget, lose, the opposite of win has one O. Loose with two O's is the opposite of tight. This is a really common misspelling. Anyway, when you lose a good CEO, been a shareholder since 88 cents, had dropped below 60 cents in 2000 before I bought. So you've been a shareholder for this company for a long, long time, and there's probably no reason to sell out. If you've been holding for such a long time, no reason to be selling out because you have to take a capital gain. And why do that? It's probably a nice dividend as well, I would assume. 4.8. So on your original capital, you're getting a really nice dividend. If I was trading this, I wouldn't be trading it at all. The other thing is any good value at these levels? I don't know. Had to have a close look. But thank you for both of those comments. Thorley Photography and Rick Thellion. Add a link. My comment went bye-bye. Recap. Next XD today, 4 cents. Or NEC ex-dividend today, 4 cents. Share buyback ending notice. CEO sold issued shares by Nine Entertainment Group. Pretty sure that's Nine Entertainment Group. This is one company I've never owned. In fact, I've never owned Nine, never owned Seven, never owned Channel 10 when they were listed. I just never saw any reason owning them, but I might trade them. So let's go back to the comment. Share buyback ending notice. Sold issued shares by 9 late August. Advertising down plus workplace culture, even as close as 2 weeks ago at 9 WA with sexy dancers. Trouble in AFR, I believe, late June 2024 or thereabout. NIB was just a take of. Let's have a look at Nine Entertainment Group. I do know someone who does work for Channel 7, and he works in the news department. I won't say who. And I did run into him at a supermarket not that long ago. And I wouldn't say there's a lot of fear, but there's a lot of concerns about everyone's jobs because of the problems all these companies are going through right now. So I'd assume that's happening at Nine Entertainment as well. A lot of cost cutting, that sort of thing. And the chart looks horrendous right now. In fact, the share price fell through support a few months ago. A beautiful, beautiful chart in terms of downtrend. And why I say beautiful, share price fell through support on the 4th of September, and the share price tested that breakdown on the 26th and 26th of September, and it failed. So that's confirmation this was a breakdown and a negative move from Nine Entertainment Group. So I would not even be thinking about buying shares in this company right now. And in fact, the next support level probably is around about 88 cents, which is the lows during the COVID-19. And that level, that support level was a nice little, a semi-strong support level, and it's breaking that. Share price has fallen from the highs of $3 down to $1.24. I just don't see a massive future for these companies, unless they pivot, do some sort of pivot. And that's why a CEO could be paid a lot of money if they make these really strong, important decisions for the future of a company. And if they're the reason why the company becomes a much bigger company in the future, they probably deserve a really big pay. But most CEOs don't make those sort of decisions. Scott, thanks for covering Brookside. It was my pick at closing, actually, and thought you may well catch it. Morningstar, we'll see. I'm not going to talk about Brookside. I talk a fair bit about that company, but they're going through capitalization, and I think that could make sure, or that could lead to a really good scenario where all the PIP traders are out. And now we see the share price rally because the share price is significantly higher. That's what I hope happens. Whether it does happen is another story. HBK Fortis, wondering what your thoughts are on potential US rate cuts coming up in a few weeks. My mate's telling me stocks will crash. I've talked about this, haven't I? Yeah, I'm almost certain I've talked about that because I remember discussing that in a video. And I've definitely talked about that because I remember laughing at this because I can't pronounce anti-money because I'm pro-money. Yes. I just talked about Demerix yesterday. I'm not going to talk about the technology, but the chart looks pretty good. Hi, Kneppy, could you please explain the show cause notice for a star? Actually, yeah, I'm not following the show cause notice. I'm pretty sure. Yeah, don't understand it too much. Where was it? Show cause notice and Treasury Casino building sale. So I actually did see the announcement, and I just moved on. It just seems like they are attacking casinos because of money laundering, that sort of thing. I think politicians should be attacking themselves for being corrupt, that sort of thing. And a lot of the corruption in politicians or politics is actually legal. You get donations from really rich people. In my opinion, that's corruption. Because they are influencing how you make decisions. And that, in my opinion, is corruption. But it's legal. They are able to do that. Anyway, in addition to the show cause, what is the show cause about? I have no idea. In fact, we could Google it right now. Show cause star. And hopefully there is some sort of star. There's some sort of explanation. I've always thought about this being about money laundering, and they weren't doing a good enough job in regards to money laundering. So here we go. Issued a show cause notice to SAR seeking its response as to why it should not take disciplinary action in respect of breaches substantiated in the second Bell report. So what is in the second Bell report? I just don't know. I haven't read it. Okay. The notice relates to 4 significant breaches detailed in the second Bell report, including one that resulted in the cash fraud against the Star, a failure to run source of wealth checks on hundreds of members flagged as high risk, and fraudulent guest welfare entries that put already vulnerable customers at higher risk of harm. Okay, so that's a little bit worse than I was thinking of when it comes to money laundering. But when it comes to, you have people who might be addicted to gambling, and maybe some of the casinos are, what's a good word here? They are sort of, what is a good word? So they know that there probably are people more susceptible to gambling, maybe addicted to gambling, and they help promote, maybe not promote, but they help to engender those people who have an addiction to gambling. Because, yeah, that's probably how they make a lot of money, by getting people to just gamble and gamble and gamble. Anyway, so it seems like maybe that's what's happening with this, is they're not doing a good enough job when it comes to that sort of thing. Anyway, so yeah, anyway. Rick Thellion, European Central Bank rates. Funny enough, I was just talking about this. Facebook, they need to be 13 years to open an account. It should be their parents watching them. Absolutely agree with that. And it seems like the government is saying to the social media platforms, it's your job. No, it's a parent's job. If they don't want their kids to be on social media, it's up to them. If they don't care, it's up to them. It should not be the government's rules. And the very fact the government has said it's the, what do they say here? Labor to force Meta, TikTok to demonstrate enforcement of age restrictions. No, it should not be up to them. If I was Meta and TikTok, I'll say get lost to the government. I'd say screw you. It's not up to us. Jeez. I just hate what they're doing. Absolutely hate. Pensioners to pay more for healthcare in nursing homes after mid-year next year, depending on assets. Announcement on Star, new CEO, but awaiting counting. MTS Supply, FD, IGA, Foodworks. Okay, so a lot of thoughts there. You can just see me ranting on about that social media. I just, Doug Technology selling off big time after CFO resignation announcement. Okay, overreaction, thinking it could be bounced hard. So I've already talked about Doug today, haven't I? So hopefully, and I didn't know. I actually didn't know CFO resigned. There you go. Sometimes I miss announcements. CFO role. Yeah, I missed this one because it was not marked price sensitive. That's why I completely missed it. Not marked price sensitive. In fact, this could have been price sensitive when you see. Now, why did he resign? That's the other question. Yeah, it doesn't say. But yeah, maybe that did cause a little bit of nervousness in the market. I can definitely see that. MLS did well, looking good. MLS. What is MLS? Metals Australia. Let's have a look at Metals Australia chart, because that's all I know. Well, I don't know anything about this company, so all I can know is the chart. And all I have to do is just have a look at the daily chart and just see what's happening. And I'd still say the share price is in a downtrend, but there is hope that the downtrend is coming to an end. Just hope at this point in time, but that's all I've got just by looking at the chart. Other than that, I have no idea about the rest of the company, and I don't feel like doing any research right now. Thank you, AIJV2PN. HBK Fortis, well, thanks. Your explanation on interest rates was really great. Appreciate it. You're welcome. Thank you. Okay, why is Whitehaven falling? As I said, why is iron ore falling? Because Chinese steel production is falling. What's the other ingredient in steel? Met coal, which Whitehaven have lots of. Let's have a look at the chart for Whitehaven. I have noticed the share price has bounced recently, probably because of what you were talking about. And funnily enough, the share price bounced off support at about 560, and it bounced hard. Other than that, share price going sideways. A bit of short-term fluctuation in the share price, but other than that, share price just going sideways. Really big volume. One thing I noticed, really big volume came in when the share price started to drop, and we've seen maintained in the relatively higher volume since then, although the volume has been dropping. I always look at volume, well, not always, but I am attracted to volume. It tells you a lot. Stocks under the hood. Thanks for looking at the stocks I mentioned. Sidev, Pantoro, and Matter. Outlook for Matter was quite a bit weaker than the market was expecting, plus earnings before tax, excluding abnormal items, lower. So that was an exit for me. Still love Sidev and Pantoro, but my favorite stock at the moment is AI Media. Bought some RKT recently too as a bit of a lottery ticket. Keep up the good work. And AI Media has been an absolutely stellar run recently. Maybe a little bit of weakness recently, last few days. No, not really. This is another nice looking chart. This is the one I'm definitely missed out. But again, there's a lot of opportunities on the market. This is one where I could definitely see someone take a position back in July, August at around 40 cents. There was a break, a really obvious breakout, and the share price tested the breakout a few times and then just took off. And look, the volume has increased as well. So AI Media Technologies has the AI in their name. And the chart still looks pretty good. No complaints about the chart. I'd say the market cap is getting up there, 167 million, and maybe they have to prove themselves when it comes to their Appendix 4C. I'm pretty sure this company, can't remember if this company does an Appendix 4C. No, they don't. There you go. And the other one, you said you bought some RKT. I don't know this one. Let's have a look at the chart. Okay, is this Rocket Boots? RocketDNA. What's Rocket Boots? Is there a company called Rocket Boots? No, I'm probably thinking of RocketDNA. Oh, there is a Rocket Boots. Yeah, Rocket Boots, ROC. Now, this is RocketDNA. I know absolutely nothing about this company. RocketDNA, I would assume they're it says IT company. I was going to say they're a health company with DNA in the title. It just shows you I don't know anything about RocketDNA. So share price is fairly low, 1.8 cents. Share price was below 1 cent, so this is one reason why I wouldn't be following this company. Share price is fairly low. Share price has gone on a bit of a run recently. Probably my only concern would be the volume. And I'm just going to have a very quick look at the most recent Appendix 4C. I would assume this company does do an Appendix 4C or release that. And there we go. RocketDNA. And I've never had a look at this company, so more than likely they are nowhere near being operating cash flow positive. Drones and automation. RocketDNA. Okay. So I would say they do have a bit of revenue. Receipts, 1.9 million. They are not far from being operating cash flow positive. I probably should have a closer look at this company. So RocketDNA, rockets. If they're doing rockets, I'd love this company just because they're doing rockets. Let's go to the about section. Multinational drone-based data service and technology solutions provider for the mining, agriculture, and engineering industry. So they do drones, but for mining, agriculture, and engineering. Aerial surveying and mapping, security and surveillance, and blast monitoring and fragment analysis. Okay. They already have customers like South32, Newmont, Red 5, and Cerriti Gold, which I've never heard of. Okay, so why don't they have more revenue and receipts if they have really good customer base? Okay, I'm going to have a closer look at this company. And I do like the share price action the last month or so. Just the volume. I like a little bit more volume. So RocketDNA. And one of the good things about this channel is sometimes you give me ideas. Now, the whole reason of me doing this channel is to give you ideas. But again, you give me some ideas sometimes, and this is one. I've never had a look at RocketDNA, and now I will. Okay, this is James, who really likes Andy and Silver. And I don't think I'm going to talk any more about that one. Okay. Have I discussed this? Again, I like this one. Seems like I have discussed that one. Okay. You're welcome. So Anderson says, showing the companies alongside the commodity is a very nice adjustment. I did that once. And yeah, or maybe more than once, but yeah, it helps explain that a lot of mining companies are beholden to the mine or the mineral or the commodity they are mining. The share price goes up and down based off the movement in the commodity. What time am I in? Okay, I'm going to end it there. Sorry, HBK Fortis. SRG was my first buy, but I'll talk about that the next time I've liked all these, so I'm wondering if I've discussed these. No, I discussed this one. Anyway, I'm going to end the video right there. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.